Hello brothers and sisters, this is problem 1211A, and I want to apologize for uploading it so late tonight, but of course I was studying for the exam that I did today, and I'm heading out to Virginia from Toronto tomorrow, so there's a lot that's happening early in this week for me I'm trying to get caught up on. Anyways, this problem is going to ask us to do a statement of cash flow. So this is what your completed homework will look like for this question. What we have to do is we have to use this information that we have here, the comparative balance sheet, and this information to give us here, and transfer the appropriate information into our statement of cash flows. Now the first thing we have to remember, this is typically what a statement of cash flow statement looks like. It will include net income, and then it will include net cash from operating activities, cash flows from investing activities, and it will include cash flows from financing activities. Okay, and so to begin with, we have net income that starts off the cash flow statement, and that's $41,107, and we can find that information from line 4. Net income for 2017 was $41,107. Okay, depreciation expense. If we look at line number 1, we'll see here operating expenses included depreciation expense of $46,662. So that takes care of that. Now the loss on disposal of plant assets. The way we calculated that is if you look at line number 5 here, it says that in addition, equipment costing $24,442, the book value, a book value of $11,110 was sold for $8,888. So what we have to do is we have to subtract the book value for the amount that it was sold, and we get an amount of $2,222, and that's what we'll enter here. Next, we see a decrease in accounts receivable. So if you go to accounts receivable here, we'll see that accounts receivable decreased. In that situation, it's a negative number. But when you apply it to the operating activities, it's $8,888. What's this implying is that since the amount went down in accounts receivable, that's going to be a cash flow in. Okay, so we got $8,888. Now, increase in inventory. We look at our inventory, we'll see here that it did increase $10,499. Okay, so this implies, right, like they bought more inventory, so that's money going out. So here it's going to be negative $10,499. All right, now we have an increase in accounts payable. If we look down here, that was $9,699, right? So for accounts payable, it's an increase, so that's $9,699 we're listing here. Now we look at our prepaid expenses, and we notice that our prepaid expenses went down. So when the prepaid expenses go down, it's going to be a cash flow in, and so we're going to put $6,355 here. Now these are all the items that we require for our operating activities from this information here, and so we're going to add all that up, and it's going to come to $63,327. We total net cash provided by operating activities, it's $41,107 plus $63,327 for that total. So the next part, we have to look at cash flows from investing activities. Investing activities include things like land and equipment. So we have to check for the sale of land. Now this was tricky for me, but what we can see here is if we look at our land, it's $16,665. So land went up $16,665. That means we bought $16,665 of the land here. And so since we bought that amount, it's money that's coming out. So that means we spent $16,665. But if you look here, 44,440 shares of $1 par value common stock were issued in exchange for land with a fair value of $44,440. So if you take the minus $16,665 that we spent over here, and then you add $44,440, you're going to get a difference of $27,775. And so that's the amount that we have to put here. Okay, it says purchase of equipment. Let's look at line 5 for that. It says here we purchased equipment for $102,212. That's what we'll list. We purchased that, so it's money going out, so it's a negative cash, right? Negative cash flow. Sale of equipment. We see here that, remember, the equipment was sold for $8,888, so that means we got money coming in, so it's $8,888. So for the cash flow from investing activities, if we calculate this amount out, we're going to get minus $65,549. Okay, and finally, we just have to look at cash flows from financing activities. And the only cash flow from financing activities that we had was, as we see here, cash dividends of $13,332 were paid. And so it was paid out, so that costs us. So the cash flow went negative, $13,332, and that's on line 3. Okay, finally, we have to put down net increase in cash, and that is the difference between 2016 and 27. There's our cash. The difference was $25,553. Cash at the beginning of the period was $49,995, and that's where we put that. Cash at the end of the period was $75,548, and that's where we put that. And finally, the thing that we put at the end is non-cash investing and financing activities. I wasn't too sure where that amount would go, but anyways, it's acquired by land, issuance of common stock, and that's $44,440, and you'll see it on line 6 here. And you'll also see it as the same amount in common stock here. So $44,440. So basically that's how we complete our cash flow. If you need more information on how to do this, I would go into the required studies, and there's 2 videos. The similar to exercise 12.7 is a lot like this one. But I found that the video at the bottom, how to prepare a statement of cash flows indirect method, was actually more useful to me, and that's actually how I based calculating this homework on. And after you get to all these figures, you input them into your statement of cash flows, and the numbers on the previous page all match what's here. And it took me 3 tries, but I was able to get it right. So that's it. This video could have been much longer, I guess, if I had to explain every single point, but I want to make it as brief as possible because I know that no one wants to hang around and watch a 15-minute video. So I hope this helped. And again, use your required studies if you have any kind of difficulties. Thanks again. Bye-bye.